What's up, Conquerors? It's your host, Alex, back again in the financial fortress that is Dividend and Conquer, where we believe every stock portfolio should have a crown. And by crown, I mean those royal dividends. Today we're diving into a tale as old as time. No, not Beauty and the Beast, although we'll talk about some beauties in the stock market and the beastly times they faced. I'm talking about Dividend Kings and Aristocrats, the royalty of the stock market that has weathered recessions, wars, and inflation like the kings and queens of old handled a little court drama.
The future kings and queens of Narnia.
Oh my god, a talking beaver!
Yeah, something like that. Alright, so why are Dividend Kings and Aristocrats the belles of the ball? Well, it's simple. Dividend Kings are companies that have increased their dividend payouts for at least 50 consecutive years, while Aristocrats have done so for at least 25 years. That's right, folks. We're talking about a commitment longer than most Hollywood marriages.
Life you've already given us. I'm so ready to say I do.
Now you might be wondering, Alex, what's the secret to their longevity? Great question. Let's jump into the history machine and take a peek at how these companies have conquered the chaos through the decades. Picture it, the 1970s, bell-bottoms were in, disco was alive, and inflation was like that one party guest who just wouldn't leave. But Dividend Aristocrats, like the charming Procter & Gamble, didn't just survive the inflation dance-off. They thrived, increasing dividends as steadily as the beat of a Bee Gees hit. Fast forward to the 80s and 90s, where big hair and neon were all the rage, but so were economic downturns and market crashes. Yet our dividend-paying heroes, like the venerable Johnson & Johnson, stuck to their guns, doling out dividends with the tenacity of a hairband's power ballad. Dividends, not drugs. Now let's not forget the dot-com bubble and the Great Recession. While tech companies were popping faster than bubble wrap under a toddler's feet, Dividend Kings like 3M kept calm and carried on, proving that a diversified business model can stick like their Post-it notes. Remember, Conquerors, in times of chaos, it's not just about the size of your portfolio, but the quality of your assets. Through wars, recessions, and even during rampant inflation, our dividend aristocracy didn't just pay dividends, they increased them. It's like getting a raise every year for just showing up to the party. And who doesn't love a good party? But it's not all jesters and joyrides. Even royalty has to follow the rules. These companies maintain low payout ratios, meaning they're not giving away all their treasure to shareholders. They keep enough gold in the coffers to invest back into their kingdom, ensuring the longevity of their reign. It is a delicate balance, my loyal Conquerors. A balance as critical as choosing the right moment to tell your in-laws you've sold the family heirloom to invest in crypto. Kidding. We only make sound financial decisions here, like investing in companies that have stood the test of time.
But joking apart, it isn't what they say that matters, but how they say it. Oh, yes! Oh, yes! Oh, yes! Oh, yes! Oh, yes!
Hear you, dividends for everyone. But seriously, let's get into the nitty-gritty of why these stocks are more reliable than my grandma's lasagna recipe at a family reunion. First off, Dividend Kings and Aristocrats are often leaders in their respective industries. We're talking about companies that sell products people need regardless of whether the economy is booming or if we're in the midst of a financial winter wonderland. These products are like the bread and butter of your pantry. You always keep them stocked. Now, let's wade through the economic swamp for a moment. Think about this. During recessions, people may not buy the latest smartphone or splurge on a luxury cruise, but they'll still buy toothpaste, medicine, and yes, even toilet paper. Remember the great TP scare of 2020? It's the consistency of these products, the sheer necessity, that gives companies like Dividend Kings and Aristocrats their armored edge. And with that armor, they shield their shareholders from the arrows of market volatility. So what can we, as modern-day financial knights and dames, learn from these tales of yore? It's that investing in dividend kings and aristocrats isn't just about earning a piece of their profit, it's about being a part of their legacy. It's like being in a guild where the entry fee is ownership, and the reward is a share of the spoils, paid out in sweet, sweet dividends. And let's not forget about the magic of compounding. When you reinvest those dividends, you're not just collecting coins. You're adding more soldiers to your army, more bricks to your castle, and more... Okay, I think you get the metaphor. The point is, over time, this strategy can turn your modest kingdom into an empire. But as every wise ruler knows, even empires can face challenges. So it's important to keep your finger on the pulse of your investments. Keep an eye on company earnings, industry trends, and yes, even the occasional dragon in the market. I'm looking at you, unexpected geopolitical events. But unlike the game of Risk, in the world of dividend investing, strategic patience usually pays off. Because let's be real, in the game of dividends, you win or you... Actually, you mostly win if you play it smart and play it long. So, my fellow financial royalty, that's the noble saga of dividend kings and aristocrats. They're the kind of investments that can turn your portfolio from a wooden shack into a stone castle. Metaphorically speaking, of course. So here's to building your financial empire, brick by dividend-paying brick. Until next time, keep conquering, and remember, a conqueror never simply survives the market. They thrive in it.